So here we are, end of the week, market wrap. Friday, 10th of April, 2026. And this is our usual next pro doubt clearing session. But I'll also make it a point because I'll be sharing this in my YouTube channel later this weekend that yes, I was not possible for me. It was not possible for me for the last few weeks to share the end of the week market wrap as I generally tend to do, primarily because of I was on the move, I was traveling, and but lots happened, lots to discuss. Let's take a look at the index first. We have the Nifty weekly in front of us. The index has managed a bounce back. The bounce back has come from this gray area range zone that we had marked few weeks back, I think a month and a half back. Why did we mark this? Because of previous lows, which has proven itself in the past very clearly of certain degree of importance. And as of now, the index has the bounce back is pretty well. It's not bad. It's closed almost at the highest point of the week this week. This is the Heikin Ashi charts as always. And the one-way correction that we were going through has finally given us a meaningful bounce back. Once we go into the daily chart, we will be able to understand why this bounce back that we are going through right now is meaningful. We generally discuss Nifty and the various sectors using relative strength RRG graph. They're all the flooded ones. So what I'm going to do tonight is I'm going to clear doing it for the first time, right? So let's not keep any past flags, burden, whatever. With that thought, Nifty we don't flag generally because we don't do relative strength of Nifty. But on the weekly chart, our state of flow was negative till last week. This week, the last week that is just passing by, we have gone neutral. There's no state of flow. So if we go down to the daily chart, then you will be able to understand and appreciate why I'm calling this move slightly meaningful. That is because in the past, the bounce backs lasted for just 1 day or max 2 days. This time is a much more extended move. And the best thing about this move, you will know because if you follow my end of the day market analysis, which I share, this trap. I always have this opinion that once the market has created a trap, the follow through moves are generally very impressive. So, is this move impressive? Yes, no doubt about it. So far, so good, brilliant move. And that too, you had a huge gap up when you had the ceasefire. A bar chart or a candlestick chart will be able to show us the gap because Heikin Ashi candles can't show us where was the gap. So the gap, the day of the gap, 800 points, consolidation, today an extension. The market is in a no mood to give back any of the recent gains, right? Which is a good sign. So it's holding on to the bounce back, it's holding on to the strong gains, and the short term state of flow has improved. However, the weekly state of flow is more important. This is an end of the week market analysis. And so we are going to go neutral with the Nifty, short term bullish, intermediate time frame. Let's see. Let's not rush into it. As it is going up, the obvious concern will be resistances. Now, I generally stick to mainly past price and range and these zones. So all that I'm going to do is just copy paste the previous gray bar and just try to make sense that will this zone offer us any resistance or not. What is this zone? The zone is essentially this area where you had this low and you had these highs. So it's not a bad zone, it's not a bad area. To give it a little bit of relevance, I'm going to color code it red. so that we understand it's kind of a resistance. And level wise, it will be 24, 340, 300, 24, 800. It's a pretty wideish range. Sorry for that. It's a pretty wideish range, which is okay. It's not too far away. It's going to just enter this area. So weekly, neutral, daily, positive. There are possibility of further upsides as many sectors are turning around. So you should be looking out for both on the long side as well as on the short side if you're into derivatives. For long only traders, times have started to improve. You would now start to get good, at least few trades on the long side. Mid cap and small cap both have improved and both have closed almost at the highest point of the week. But to understand mid cap, small cap, and the rest of the 16 sectors, we always go to our RRG graph. This is our strike analytics page. I'm going to come to RRG, relative rotation graph, for the sake of relative strength. From 37 sectors, I'm going to use our pre-built own build up 16 sectors. Take the benchmarks Nifty 500 on the weekly time frame, and let's take a look at how things are playing out for over a quarter, around 12 to 13 weeks. Decent amount of names in the leading quadrant and weakening quadrant. So there are few sectors which are showing strength, there are few sectors which are showing weakness. Rest, relatively lesser names, are in the lagging and the improving. Looks good. Let's start with the leading quadrant, and I'm going to sort it out in terms of percentage change. Nifty Energy, Nifty Metal, Nifty PAC, Pharma Consumer Durables, and Midcap 100. These are the ones in the leading quadrant, out of which energy is by far the biggest sectoral gainer in the last 13 weeks. We have taken 13 weeks, please remember, around 8.23%. Energy. Nifty Energy RRG is good looking. It's just started to tilt a little down, but it's too early to comment on that. It's got relative strength. It had momentum behind it, slowing down a little bit this week, but still no problem. I will combine energy and PAC together because multiple times over the last few weeks, whenever I've shared my end of the day views with you, I have mentioned this, that PAC and energy, both of them are moving. That's because the PAC energy names are the ones which are doing relatively better. So if you can see, this is the Nifty PAC RRG, which has relative strength, but it's losing the momentum of relative strength for around 4 weeks. With this in mind, let's go to the chart. Let's go to our usual template and let's take a look at energy first. We are doing this analysis, this discussion, always from a weekly point of view first. So all the flags, green, red, whatever we are going to flag out, it's going to come only from the weekly charts. RRG for energy is positive. Our state of flow for energy on the weekly is neutral. It's neither positive nor negative. It is yet again come back to that breakout range. Yet again, if you remember, last time it came and failed. And this time it has closed above it, by the way. You should pay attention that it has closed above it, which is a good sign. However, unless I get a state of flow positive, I cannot mark it green. I'll keep it neutral. I'm going to not give it a flag, but you should be looking out for long trades in the energy pack. A daily chart of CNX Energy will clearly show this bounce back, a beautiful state of flow. Any kind of a pullback will be an opportunity. So it is a bullish. One should look at energy for long trades, number one. But because the weekly charts have not completely improved, I'm not going to give it a green flag. Approach is to look out for long trades. And with that in mind, CNX PAC, same story actually, because the market, please understand, the market has just given us a bounce back after a serious correction. That's why the weekly charts are not going to improve this week. Maybe, high chance, when we discuss this next Friday, we will get a positive state of flow. PAC had given us a distinct proper breakout and a failure and then back again. So the choppiness continues for both energy and PAC, or in other words, PAC energy stocks. For PAC and energy, I keep the same view. bullish from a short term point of view. Coming back to the RRG, the next is metal. Metal has been one of the strongest, if not the strongest, in terms of relative strength. It is farthest from the 0 point, but it has been losing momentum. CNX Metal, if we take a look at the individual sectoral chart, on the weekly time frame, beautiful move with a strong Heikin, almost at highest point of the week, almost touching an all-time high. Remember this, a sector is touching an all-time high in this kind of a market environment. That is CNX Metal. I don't have a state of flow, but because my Heiken is pure strong green Heiken and I have relative strength, I'm going to give it a green flag because of this strong Heiken. Daily chart will show you an extended move. There you go. This is an extended move. It is now knocking its all-time highs. And so any kind of a pullback should only be looked as an opportunity to go on the for a long trade. Not bad. It's good to see at least a sector knocking at an all-time high. So energy, metal, and PAC we covered. Pharma. Pharma has been improving. And it's not a bad RRG. It's just slowing down a little bit. But price-wise, relative strength-wise, probably it is doing better than 500. But price-wise, I will probably not agree at all. Because pharma, for the last 3 weeks, the state of flow is negative. This week, it has given us a strong negative hike in, which kind of cements the negativity. We saw in few of the main weighted stocks how they fell, especially in today's session. And the daily chart is going through a bounce back. Not a good sign. Price wise, it has to be a negative flag. It has to be a red flag. So, pharma, stay away. Derivatives trader can look for opportunities on the downside. Now, let's discuss consumer durables. Very good looking RRG. If you have ever heard me talk about RRG, I always say this left to right, down to up, rising. This kind of an RRG in all the four quadrants are good RRG. This kind of an RRG in all the four quadrants are negative RRG. And so consumer durables have definitely improved. Definitely good looking. It gives you the confidence that consumer durables of late is doing better than CNX 500. But what about actual price behavior? Now we come to Nifty consumer durables on the weekly. Turn on a dime, sharp revival, sharp reversal, big good close at the highest point of the week. Turn around. Not a strong hike, and yet I will stay neutral. No rush, no problem. It has been choppy, weak, failure. It has done a lot of drama, to be honest. Unlike FMCG, FMCG has been just dragging itself down for a long span of time. So let's wait for another week. Of course, this will fall in the same category of energy and PAC. Their weekly has not improved completely. Their daily has improved completely. And so, from a short term point of view, bullish, but our discussion is from the intermediate point of view, weekly point of view, not yet bullish. Now, I personally always discuss the consumer durables and FMCG back to back. And so, I'll quickly cover FMCG's price. FMCG's price, as I just shared with you, FMCG was clearly down. It did not give any kind of drama. It consolidated and it cracked. This week, it has bounced back. State of flow has gone away. It's neutral. It's a golden bar on our Heiken formula. This can be a reversal. Too early. Good close, like most of the sectoral charts. Most of the market has closed at the highest point of the week. So it is a good close. So again, I will go neutral, but before I go neutral, I should quickly take a look at FMCG's RRG. And Nifty FMCG is in the improving quadrant. It is angling like this. So with that thought, FMCG loses the red flag and let's go neutral with FMCG. Now, midcap was there in the leading quadrant, I remember. The weekly chart again has just reversed at the highest point of the week. Same story, all that we have discussed right now. So we go neutral there. So I think leading quadrants, we have covered all of them, out of which an exception standout is Nifty Metal, almost knocking its all-time highs. Energy, PAC, consumer durables, midcap 100, The weekly charts are yet to completely cement positive, but the daily charts have improved. So short term bullish. And pharma, no, be very careful. Should we go to the weakening quadrant? The weakening quadrant has PSU Bank, auto, financial service, private bank, bank nifty. So no, it's clearly financials and banks and non-banking financial heavy quadrant weakening. It's not good sign. These guys enjoy a lot of weightage, but we've seen good move from the private banks in today's session. So let's start with bank nifty. According to my understanding, not a good RRG. It's not a weak RRG, but not a positive RRG. Again, what is it doing? It's losing relative strength. It's losing momentum of the relative strength. So this combination is not good. Bank Nifty, relative strength, not good. Private bank will sing the same tune. PSU bank and private banks are far different in terms of their positioning of relative strength. You see where PSU bank is in terms of the horizontal axis and where private bank lies in terms of the horizontal axis. This is where private bank is and this is where PSU bank. Both of them are weakening, by the way, but PSU has far more relative strength. And financial services will also more or less be the similar kind of a reading. So this is classic weakening behavior amongst the financials. Starting off with Bank Nifty. Bounce back, negative state of flow goes to neutral. Pretty good bounce back. The good thing about, again, I'll repeat, close at the highest point of the week. It's a retracement of the previous fall. One should not kind of accept that okay, the pain is behind us. Not yet. Too early to take that call. So neutral, staying neutral is fine. This will again fall in the same category of the PAC and all those. The daily charts have improved. The weekly is not good. So weekly overhang will be there. Any kind of trades, if you do short-term trades, please keep it hit and run, quick entry, quick exit. Don't sit on your position for too long. Be a long trade or be a short trade. So Bank Nifty neutral. I think private bank will sing the same tune. Yes. I'm keen to see the PSU Bank, and PSU Bank after four state of flow negative is just bouncing back. Again, not outside the shadows yet because the larger time frame, the pillars that we call the higher time frame Heikin is also weakening. So not a very good picture, but you never know. And then CNX Finance, again the same thing. So sharp bounce back. These are the previous lows. You can expect some resistance. So primarily short-term bullish, quick hit and run trades, not completely out of the weakness yet, just a sharp bounce back. So we'll wait and watch. So I'm not giving them any flag whatsoever. Auto is another sector which is in the weakening quadrant. You can see the autos behavior in the last 13 weeks. It's been drifting from right to left, losing relative strength, and all of a sudden now picking up a bit of momentum. Will it go back? Will it start to dominate? Will it start to show some leadership? I don't know. Let's take a look. Again, the same thing. Improved, sharp reversal, revival, state of flow is still negative. You had a decent amount of zone over here where you had found some support. The support was broken. Will it become a resistance? Will you come down? I don't know. But again, best thing is go neutral. Short-term charts will be positive. Intermediate time frame charts are not so great. You understand what I'm talking about? Is this area. We'll see whether it offers any resistance or not. So we will gonna stay neutral in auto also, which means we have to be extremely picky when it comes to finding some trades for the next week going forward. Brings us to the lagging quadrant, realty and IT. Though IT has been picking up, still from a relative strength point of view, it's not out of the shadows yet. And Nifty Realty is picking up a bit of momentum. Both of them don't have relative strength at all. These two sectors are the most underperforming sectors. However, underperforming sectors also turns around. With that thought in mind, let's take a look at Nifty IT. Yeah, it's bouncing back and you have a positive state of flow. Why do you have a positive state of flow in an IT? That is because IT had stopped falling 3 weeks back. Because IT was falling much before the market, because IT was under the AI drama. I like to use the word drama. So IT was under the AI drama pressure. Then, of course, the war pressure, the overall market pressure. But the last 3 weeks, 3 weeks back, IT stopped falling. Golden bar, a bit of a green Heikin showing improvement. And this week, strong Heikin, state of flow goes positive. Now, this is difficult. Why? Actual price is showing some strength. Relative strength, no strength whatsoever. So it's a clear contradiction. Whenever there is a contradiction like this, I generally always go with price because it is price that dictates the relative strength. If IT goes up further for 3 weeks, then what looks like a weak RRG will start to turn around. RRG is a function of price behavior. So I use RRG, or we can use relative strength to understand who is positioned where, who is underperforming and who is outperforming. But the most important factor is always price. So I'm going to go ahead and give it a green flag because the weekly state of flow has turned positive. The daily charts will show you improved behavior. The daily charts have started to give you short-term pullbacks, and you never know. You can look for some pullback, post pullback rally. That depends next week. Realty. Realty's weekly chart also has improved, but not a good Heiken, not a strong Heiken, and we do not have a state of flow either. So, and RRG is anyways weak, so stay away. Remember one thing, that you are going through a bounce back. Please keep an eye on wherever you find possible polarity. Previous lows can become highs, so mark them. I have one marked over here. This also one should mark. So, reality neutral. This will leave us to the last quadrant, which is improving. In improving, we have already covered FMCG, which leaves us with media and small cap. Not bad small cap, and okay, not bad media also. Of course, if you follow my work, you know that I'm not a big fan of media stocks, and you will understand if you take a look at the monthly chart of CNX media. You will understand why. So, anyways, that's not the agenda. The weekly charts is neutral. It's just giving us a bounce back. It does not even have a divergence. I'm not that keen. But small cap, um, same like the overall market. Short term, there's improvement, and higher time frame, we are yet to see some positive state of flow. Apart from these 16 sectors, we have few more. Capital market, I'm going to go with the state of flow. Now, capital market has hit an all-time high, if I'm right. um 49.64, 49.62. So just 2 points. So you can consider this to be an all-time high, and this stands out like metal. This is standing out. However, we don't have a state of flow yet. The Heiken is a very strong one, close is very strong. So you should respect the move. You should I always like to respect the price behavior, and so capital markets, we go with a green flag. Chemicals, no, sharp bounce back. Consumer durables, we have already discussed. Defense is turning around. It's stuck between these two range, and I don't even remember when did I draw this range, these two zones. It's like a ping pong ball. It's like a oscillator within these two bands, and nothing much. Stay neutral. Digital is improving with IT. IT has moved into a positive state of flow. Digital is yet to. Probably we can see some move next week. So stay neutral. And last, tourism, which has been weak for quite some time, is also giving us a bounce back. So it does not, make sense to blindly mark these sectors red or green, which clearly tells me that as we are discussing the markets on 10th of April 26 on a Friday, we have a bounce back week behind us. Correct? We have a bounce back week behind us. In that bounce back, we go to the daily chart. We had a big 800 point day and we had a big 600 point gap up and all those things. Before this bounce back, we had a severe correction, a decent, severe one way correction without any meaningful bounce back. That's the kind of sentiment, that's the situation, that's the context of the market where we are right now. And that is why almost all these charts, barring metals and capital market, almost all the charts have fallen and have given a sharp bounce back. One sharp bounce back. And that's why I don't have the confidence yet to mark it green or red. Wherever I found confidence, like a metal or a capital market, it makes sense. It's an all time high. IT, which is reversing and has started to stopped falling and started to go up 3 weeks back, and pharma, where clearly there are signs of weakness. So wherever the conviction or clarity of the reading is there, I have given it a flag, and where the clarity is not there, doesn't make sense. Most of the daily charts will be positive. So short term traders should be looking out for some movement. In the commodities, or before we go to the commodities, the USD INR is 92.9. On the weekly, it's just cooling off. And if we take a look at the daily chart, it is just bouncing back after just touching close to that 92.1. Okay, means much better than having it at 95. But again, as I said, um, still not completely out of the strong uptrend for the dollar. Gold and silver are consolidating. We'll take a look at the gold and silver from the weekly point of view. Looks like a short term 2 week bounce back after a sharp correction. So these charts can open up again on the downside. Silver, similar kind of a reading. So I'm not too bullish on gold and silver even right now. It'll be interesting to see how the markets open up next week and what are the cues and news that pile up over the weekend. As I record this video, it's 8:30 p.m. Friday evening, and Dow Jones and the US markets have opened. I'll quickly take a look at the daily chart, and they will all look very similar. Equity as an asset has bounced back very sharply across the globe this week, and US markets are no exceptions. Nasdaq is bouncing back really well. This is really, really sharp. Means you're the one who started the fire, uh, and you're also uh, enjoying that the fire has stopped, at least for the time being. But nevertheless, it seems, at least for our markets and the Asian markets, the equity markets have closed really well, strong bounce back. All depends on the next couple of weeks, especially the next week, whether this bounce back will sustain or not. I sense it is a much possibility because in the last 2 days, the index held the gap up, the huge gap up. It's not a 150 point gap up. It was a huge gap up. Generally, such wide gaps generally get tested. But 2 days, it has held pretty well. Yesterday, it fell 200, 220 odd points. Today, it gained 275 points. So it's kind of managed to close the week on a good footing. So with that, we will see how the market plays out. So choose accordingly. Please understand, majority of the weekly charts are coming out of the weakness. All of their daily charts have improved. So your short term has improved. Intermediate is yet to improve. Any trades short term in nature, uh, just make it hit and run. Don't sit on your trades for too long. If you're a trader, from a trading point of view, not investment. Right? Okay, now let's focus on our next pro doubt clearing. So please post your doubts and questions and let me clear them one by one.